Hey everyone, it's Eric Green. Want to say hello to everyone in our tax rep community. And I want to talk to you about our sponsor, Call ENQ. And I'm going to just say this, we would not take any sponsor or any product that we do not use ourselves. If you listen to episode 36, Dialing for Dollars, I discussed kind of how we discovered this. It is amazing. It is literally changing the way we practice in our office, right? What Call ENQ does is, you're sick and tired of waiting, right? 30 minutes, 45 minutes, an hour. You finally get through to the IRS. Their system is down. They can't help you. Sometimes they just hang up on you, which is always fun. And then you have the problem is, do you charge the client for this or do you not, right? It's not the client's fault. On the other hand, it's not your fault. Call ENQ says they will get you through to the IRS in under 3 minutes. We are averaging 30 seconds. When we talk about saving in our business, time is money, right? We think projecting now for the month we've been using this, if we project to a year, we will probably save $50,000 of billable time, right? That is a lot of money that we'd love to have fall to our bottom line. Okay? And I'm sure our clients would rather not pay for. So with that, I'm going to put a link below. Go check out Call ENQ. It is a fantastic service, and I'm telling you, we negotiated for ourselves to get a free 100 minutes as part of our deal with them. All of our tax rep members will get 100 free minutes. You can check it out. You have nothing to lose and a lot of time and money to gain. All right, go ahead and check it out. Log into the forum. Let me know what you think.
Hey everybody, it's Eric Green. Welcome to the podcast. In this episode, we're going to be talking about adventures in IRS collection, the good, the bad, and my client didn't seriously just fucking do that, did they? All right, because we've all had clients that fall into one of these buckets. The client that listens to us and we get through this and we're all done, we're all good, we can high-five each other, it's resolved, and we move on. Then there's a client that just isn't going to listen. And we meet with them and we start burning through the retainer. And at some point, we, at least at our firm, have the uncomfortable discussion with them that, look, this is becoming a waste of time. Basically, it's time for you to move on, right? You clearly don't want help, or you're not serious about getting help or resolving this. And we refuse to just stand here and be kind of an intermediary running interference between you and the government. And then there's my clients didn't seriously just effing do that, where we have a client that not only didn't listen to us, but then went and did something that was so stupid that they've undone any good we could have done for them. Okay, so what I thought we would do in this episode is literally go through sort of the various wrinkles with offers and compromise when this stuff happens. Okay. Now I will tell you this. I've started getting a lot of questions from listeners. So I'm going to begin starting next episode answering questions that come in via email. All right. So if you want to get your questions answered on the podcast, email podcast@taxrepllc.com. And the next time I record, I will be sure to try to answer the question. If it's the kind of thing I can't really answer on the podcast, I will, email you directly with my thoughts on it. So, by the way, this coming week, we will be recording how to 10x your tax practice. And I'm very excited. Joining me is going to be Dominique Molina, who is one of the founders of, the American, Foundations for Certified Tax Coaches. And I think it'll be very cool to get her take on how she helps her members build their practice, because for her, it's basically tax planning, that kind of stuff. For us, it's IRS representation. So we're sort of doing the same thing, but not really. But where I think we are all headed here is the fact that there's a lot more money to be made beyond 1040 prep, all right, or beyond bookkeeping, right? That's where I think we're going. But for this episode, I thought, only because this is the stuff that I get asked a lot about by our tax rep members. I get asked a lot about when I do the live talks. So let's just get into it. Let's just call it the compliance issue. And I'm going to tell you a story, which normally would be the end of the story. And then I'm going to tell you how we fixed it, which you can't always do, but we managed to in this case. And this was one where I actually was showering one morning and it came to me. And it does seem that in the shower is where I often do my best thinking, but that's actually how it went down. So I filed an offer for a couple, a single member LLC. They're they're in the service business. It's his LLC. She works there every day. They have payroll. They have two other employees. So things have taken a downturn for a number of years. We filed the offer in compromise. We get them into compliance. We file the offer in compromise. It ultimately gets denied. It's centralized. You always go to appeals, right? I've told you that. You just assume, no, you're going to appeals. Tell the client right out of the gate, we're going to go to appeals. It's what we always do. The speech that I give our clients when they come in goes something like this. Mr. and Ms. Smith, here's the process. We're going to prepare the offer. You're going to get us this list of information we gave you. You'll get us our check. Thank you very much. We will prepare the offer. You come in, we sign it, we'll file it. We're going to wait probably 4 to 6 months. It might get moved from location to location because they're always trying to inventory balance. So you'll get one that they've assigned it to Atlanta. Then you'll get it that they've sent it to Plantation, Florida. Then you'll get it that it's been sent to Fresno, California. Meanwhile, the client's freaking out. Why is the government doing this? Because the client assumes that the IRS does things with intent and that there's a reason. What they don't realize is that the government is completely screwed up and has no idea how to manage its own inventory. I had a case, and I'm not kidding, that went from Atlanta to Plantation, Florida, back to Atlanta, back to Plantation, Florida, to Fresno, then went back to Atlanta. So ultimately, Atlanta worked this. It wasted 14 months being moved around the country in this inventory leveling that the government does. Why do they do that? Because it's some stupid automated system that does that. Anyway, so we file the offer. I'm sorry, I was talking about what we tell the client. So I tell the client, look, 6 months, we'll hear from them. They might move it around. They will then ask for a lot of the information we've already given them. We will give it to them again. They will deny it because they will come up with all kinds of ridiculous reasons why you can full pay. You just didn't realize it. They'll deny the offer. We'll respond. They'll deny it. We're going to go to appeals. All right. So just so you know, out of the gate. And this way, what I'm doing is I'm trying to manage my clients' expectations. And I tell them, you're looking at 12 to 18 months. I love it when people come running in and they're like, I think I'm going to come into money in about 4 months. Can we get an offer and compromise done? No. One, there's no way it's getting done that fast. And number two, if you know you're coming into money, you have to disclose it. You're signing the 433 under penalty of perjury. Well, they don't like that answer, so then they leave. I never hear from them again. They've obviously gone to some other practitioner who they're not going to talk about the money they're coming into in the hopes that they can file it and the practitioner won't know. But anyway, and they'll say, well, I read your stuff. You know everyone at the IRS. You're friends with the head of collection. Can't you get them to do it faster? No, I cannot. And I've tried, by the way. And unfortunately, not even the magical Eric Green can get things moved up, moved up the chain there as far as the where you are in line. You get into queue and you just sit there. All right. I can use call ENQ, right, to get right through to the government when I'm calling them. But as far as the offer and everything else, unfortunately, ENQ has no power in that arena. It's going to have to sit there until it gets worked in the order that it was received. Now, my clients come in. I told you business has been bad for a while. It's the wife working there. She is not on the payroll. We have two other employees. We get them into compliance. We submit the offer. We battle back and forth. It's now about 12 months. We go to appeals. Appeals officer gets it, our local appeals officer, and she calls me, Renee, and says, Eric, I went through it. I agree with you. We don't even have to have the hearing. I'm going to go ahead and accept the offer. However, I did want to let you know, and by the way, this is now right before New Year's. She said, I'm going to be gone for a few weeks. I'm going to, submit it. It'll probably be about 30 days before I get it. By the time I get back from vacation and New Year, I get it submitted and the supervisor will sign off. Give me 30 to 45 days. By the way, I did want to tell you, your clients have not made their second, third, or fourth quarter estimated payments. So this is going to be voided in April, just so you know. And when I tell you frustrated, one, because I know they really didn't have the money. And two, it's to come that far. And don't get me wrong, there are some of those national companies that could care less. Oh, well, we got their money. You want to do another offer? We have to do another offer. Give us more money. That's just not the way Jeff and I roll. All right? I mean, this is not what we do. We do not gouge our clients. I do not hope terrible things happen to them so I get more money. It's just not us. It's not our characters. It's not the way we practice. So I'm really upset about this. And of course, like I told you, I called them up and I'm like, you didn't make your payments? They said, well, things got slow, but don't worry, we'll make it up by April. I'm like, it's done. You voided your offer. They're freaking out. She's crying. I'm really upset about this. About 2 days later, in the shower, like I told you in the morning, I go work out, go home, get in the shower, and it comes to me. And what I hope you take away from this is that this doesn't happen often, but there are moments where you can salvage this. I call up the CPA, who's a friend of mine. I said, Pierce, I tell him what happens. He's cursing him too. I said, look. We have payroll. The wife is there like every day. Can we put her on payroll, bonus her the income, and zero the Schedule C? So follow what I just, and of course he said, yeah, I think we can do that. So what we did, follow this. We put the wife on payroll. We did a profit and loss, right? Right now it's the end of the year. We do a profit and loss. We know what the bottom line is. We basically reported that as her wages in fourth quarter. I call the client, tell them this. I said, so what this is going to do is the wages will come in. Wages are always considered timely when reported. The wages will come in. It's a deduction against the Schedule C. The Schedule C will be zero. We will not have an estimated tax penalty. The W-2 will come in the wife's name. So net, the taxes will be the same, but we're going to do it through withholding, and we have until January, I think it's 15th. I told them, I said, can you come up with the money now? They called family, friends. They borrowed the money. Yes, they can come up with it. And that's what we did. We put the wife on payroll. We zeroed out the Schedule C. I don't think there's any ethical issue with it at all. She was working there anyway. In fact, arguably, she should have been on payroll to begin with. That said, we put her on payroll, zeroed out the Schedule C. She ended up picking up $38,000 or whatever it was, what the net income was, as her wages. We did the taxes through withholding. No penalty on the return. We salvaged the offer. Okay. Sometimes you can do that. Not often, I have to admit, but sometimes. Right? Let's talk about another situation that comes up a lot when you're doing offers or considering an offer. And there's a lot of confusion about this. When only one of the spouses is responsible for the tax debt. Well, how does that happen? Well, they do married filing separate. Or one of them is deemed responsible for a failed business, the trust fund recovery penalty for the payroll taxes. The other one isn't. How do you do an offer when you only have one of the two spouses responsible? Well, here's what happens. What happens, and any of you who've got the book know this because we go through this in the books, what happens is the following. The IRS, for the non-liable spouse, and by the way, I want to give you a caveat. If you live in a community property state, the community property rules might impact this. And I tried looking into this once. Each of the community property states is a little bit different. There are opt-in states, opt-out states. Alaska is doing its own freaking thing. So you got to look at your local community property laws. I, who practice basically in Connecticut, New York, and Mass, none of those states are community property states, so I don't tend to have to deal with this. But basically, what happens is the following. The non-liable spouse does not have to disclose his or her assets. It's not their problem. However, we do need their income, and here's why. The income is necessary because the IRS is going to do an allocation of the expenses. So for instance, let's say I bring in, let's make this up, I bring in $6,000 a month, my wife brings in $4,000 a month, just to make the math easy. So I bring in 60% of the household income. So 60% of joint expenses I'm going to be allowed. So food, let's say food and clothing for 4 people, I don't remember, it's like $1,650. I would be entitled to 60% of that. Now, a lot of people say, well, why don't you just get one person and she gets one person? We have kids, right? Now, actually, we have 4 kids, so there'd be 6 of us. But let's say it's a couple with 2 kids. Because there's, it's beyond the 2 of you, it's a joint expense. Husband would get 60%. The housing that covers the 4 people, 60%. You get 2 car payments. He would get his, he wouldn't get hers. Health insurance covers the whole family, even if she's paying for it. If he's responsible and the other spouse is paying it, the other spouse could be paying the mortgage. The assumption is that you both have income streams into the household and that you're paying your proportionate share. Okay, and that's the way it's done. So this isn't so much a good, bad, or ugly. This is more just to illuminate how it works when you have only one responsible spouse. You could also have the situation where one person is living with their significant other, boyfriend, girlfriend, whatever. One of them owes a tax debt. Well, how do you figure that? It's very simple. You take they each get their own expenses, but for those joint expenses on the 433A that cover both of them, you will do an allocation based on the income. Now, a lot of folks will say, well, what if the other person doesn't want to give their income? They don't want to share their income information. Well, unfortunately, you're probably not going to get your offer, or the person trying for the offer is not going to get it. Remember, you should always keep in mind, there is no God-given right to an offer in compromise. If you look at Code Section 7122, what it says is the secretary may compromise a debt. It doesn't say they have to. So when you get into the offer world, you got to follow the rules. Now, have I been able to argue this? Yes, I have. I had someone where the other person wouldn't share their income, but I could show what my person was paying. And ultimately, we negotiated something and got the offer done. But generally speaking, they will not take an offer without proof of the expenses. And for those joint expenses, they need the other person's income, right? And you'd say, well, they're the IRS. Why don't they just go look it up? Well, because there were rules about the IRS going fishing through other people's information. Every year, there are probably about a dozen IRS employees that get fired for going and accessing taxpayer information that they have no reason to access. For instance, let's go see how much Madonna made this year, how much Kobe Bryant made this year. You can't do that at the government. There is software that actually tracks that. And if they see you are accessing people's information that you have that is not assigned to you for some reason, it will probably cost them their job. So it's not like you can say, well, you're the IRS, you go look it up. They can't. Right? Something else I want to talk about. I did a podcast on this before, which is where if you want an offer in compromise, go shopping. That caused a lot of stir. Okay, and I just want to explain what I meant by that. When you do an offer and compromise, you have the gross monthly income, right? We don't use net, we use gross. And by the way, let's step back. When I say gross, I mean gross into the household. So if you are self-employed, it's the net business income that comes into the household before you have your household expenses and your taxes, okay? Then you go through the allowable expenses. So the first step to being a tax resolution master, what I tell my tax rep members, very first thing you do, you take the actual stuff and you begin applying the IRS standards, right? Food and clothing, the housing limitation, the car limitation, all of that stuff, right? You begin going through applying all of that. Now, after you get through, you have your income minus the allowable expenses. There may be this number left over. That's where most people just stop. But not us. We're tax resolution Jedis. What's step number two? Step number two, look at what they're not spending. For instance, health insurance, term life insurance, disability insurance, car payment. Can we, if the person has too much income left at the end of the month, can we legitimately change their financial picture and spend the money down? I'll give you an example. Person owes $100,000. There's 8 years left on the CSET. Okay? So when you do the math, all right, 8 years at 12 months, 96 months. They owe $100,000. If you have $1,100 of income left over, you show the ability to full pay within the time remaining on the statute. When they did the 2012 Fresh Start Initiative, one of the things that they did a lot of good things, but one of the negative things they did is they basically said, look, if you show the ability to full pay based on time remaining on the statute, you are not eligible to do an offer and compromise. You have to get into an installment agreement. So at $1,100 a month, this person can full pay, they can't do an offer, they have to get into a payment plan. So you have a client, the client's positive $1,300 a month, they owe $100,000, 8 years left, you do the math, can't do an offer, you gotta get into an installment agreement. What about spending the money down? For instance, you don't have health insurance. Well, gee, things got tight, we couldn't afford it. Go get health insurance. You have kids, you don't have any life insurance? Go get term life insurance. You're self-employed, you don't have disability. How long can you live without your income? And you don't have to go crazy. At $1,300 a month, health insurance alone for a family of 4, that's probably going to take care of that. All right? They can't afford that. If the self-employed person gets disability insurance, $250, $300 a month, now you're down to $1,000. You're almost there. Get some term life insurance. Now you're at $850. You're good to go. Or just get the health insurance. You will go from $1,300 a month to $100 a month. Now, a couple things. One is they're spending it on themselves, right? They needed the health insurance. Go get the health insurance. Number two, now instead of paying $100,000 back over 8 years, we can get rid of this thing for like $1,200. All right, $100 a month. If you can't full pay, it's 12 months of future income on a lump sum offer. $100 a month, 12 months, $1,200. We just saved them, I don't know, what, 100,000 minus 1,200 bucks is what, like 98.8 plus interest. That's big money. Consider the idea of going shopping. Now, again, there's a caveat to this. There's a fine line between offer planning and legitimate expenses. What is offer planning? Where you're doing it purely to get your offer through. Now, think about this. When the IRS looks at the offer and they go through the bank statements. They're trying to confirm that you've been paying this. They want 3 months. So you can't just say, I've applied for health insurance and send in the offer. No good. Looks like offer planning. You got to have 3 months of payments. Now, there are 2 ways to do this. The way I prefer is go get this stuff and let's wait till we make 3 months of payments. But what if the IRS is really hammering, right? They're breathing down their neck. You don't have 3 months. Easy. What we're going to do, well, you have a choice now. The one I prefer, do the 433A, show the health insurance you've applied for, and just mail in the form. Call collections, say person can pay $100 a month. We've submitted the paperwork. All right, that'll tie up the government for a good 8 to 12 weeks anyway. Meanwhile, now we start making our payments. By the time they come back and they agree or they fight with us or whatever, now we've got everything in, we can submit the offer. Now, the alternative approach to doing this, which I can't say that I love, but I also won't say I've never done it, you simply submit the offer without any backup. The idea being it's going to take them 4 or 5 months before they actually get to working it. By then, we'll have made the payment. So when they ask for the paperwork, we can submit it at that point. Right? That's another approach. The risk is they happen to get to it faster, you got a problem. All right. So I can't really say that I love that, but it is there on the table. Okay. Talking about the good, bad, and stupid. And I've told this story before, but I do an offer. In fact, then I'm going to tell you a couple stories. One is the client who just can't be helped. This is the bad. I have a client comes in, like kind of like the first story I told you, 1.5 years, we fight, whatever, get the offer done for $25,000. We get rid of $400,000 for $25,000. He takes off. 1.5 years later, we start getting all the default notices. He didn't pay a dime, not a dime of his estimated payments for the new year. Shows up. I mean, we get the notices. I call him. By the way, this is why I revoke my POAs now. The moment the client leaves, I revoke. Why? I don't want to sit and babysit cases that aren't clients anymore. They're adults. They get the mail. Let them call me and pay for a consult. Why should I sit and babysit their paperwork? Anyway, I didn't do this back then. So what do? I get the notices. And by the way, if you're interested in how to revoke your POA, I did that in a podcast called Get Lost, How to Fire Your Clients. So go check that out. Trust me, that is useful. We do that now constantly. Case is over. We revoke our POA. Done. I don't want to stay in the case. I'm done. My work is done here. Get lost. Okay. In fact, I think that's what we call it, Get Lost, how to fire your client. But I didn't do this back then. I get the notices, call the client. Client comes in. I'm sitting there with my senior partner. We're going over this. I said, well, how much did you pay? Because I'm thinking if we're just a little bit short, maybe we can pay it and I can try to argue back into the offer. He owes another $60,000. I'm like, what happened? And he looks at both of us. Now, this is after he paid us about $7,000 or $8,000 to get the offer done. He paid $25,000 into the government. He looks at us, and I'm dead serious. Frankly, I just don't like paying my taxes. Okay, we can't help you. And he left. I don't know what became of him. Because I think we shortly thereafter did revoke our POA, or maybe it got revoked when he went to somebody else. But there are people like that, right? When you're going to do the offer, I now having been through that, I will actually sit and talk to my clients. Say, look, this is what happens, and you have to understand something. A term of the offer is you are going to have to be, squeaky clean for 5 years, not just before the offer, right, when you file the offer and through the offer, but for 5 years after. You must maintain your compliance. Okay? Otherwise, you void the offer and you get the pleasure of doing it all over again. Right? Another story. File the offer in compromise. 6 months go by. They ask for an updated profit and loss. Call the client, sends me his profit and loss. His income is like tripled, which means he's not an offer candidate anymore. And I'm walking around and I'm just so annoyed. I'm like, of all the things, now his income has to triple? Talk about bad timing. My former senior partner, Bob, looks at me. He's like, you moron. His income didn't triple. He's finally just reporting everything because he knows they're looking at it. I'm like, oh, yeah, duh. Duh, yeah. All right. Be aware of that. Sometimes that happens. You tell the client, they're going to be reviewing whatever. Client takes it seriously. They actually finally begin reporting everything. And the final story I want to leave you with, and I've told this one before, but it is worth talking about. This goes into the category of my client didn't seriously just fucking do this. So have a company, as a steel company, come in, client, they owe about 400,000, 500,000, something like that. This isn't an offer. This is an installment agreement. File for the installment agreement, back and forth, back and forth. In Connecticut, we used to have these 4 revenue officers we referred to nicely as the 4 horsemen of the apocalypse. This was one of the 4 horsemen, Tom. And Tom and I fight back and forth for almost a year. We get him into a payment plan, $5,000 a month. Off they go. Within a few months, we get the default notice. And when you get default notices, you get a notice for each period. Well, I get like a stack of 14 of these things. Call the client. What happened? She said, look, we filed and paid the first quarter 1 day late. Oh, we paid, but we filed the first quarter 9/41 1 day late. They charged us with penalty and interest. We paid it. Can you just please get us back in the agreement? Call up Tom, the revenue officer. He said, I don't have the case yet. Wait, give me a couple of weeks. Well, the case got back to him. Calls me up. He said, no, Eric, we got to go through the whole thing again. I'm not putting him back in. I need a year of bank statements. I need an updated 433. I need a year of the American Express credit card charges for a steel company with 300 employees. I don't even know. This stuff is probably 2 bankers' boxes full. So I kind of go through it. I always like to try to tie out the deposits and the bank statements to the 433. But do I go through 3,000 pages or whatever it is in detail? No. Send it over. Several weeks go by. Tom went through it in detail. He calls me up. He says, your client has a boat. So what do you mean they have a boat? They don't have a boat. It's not on the 433. He said, no, they have a boat. He said, I see marina charges and I see charges out at restaurants in Port Jefferson, which is directly across Long Island Sound from us on Long Island. And he says that, and I'm like, oh, here we go. Call the client. I said, do you have a boat? She starts crying. I'm like, oh no, here we are. She's like, we bought a boat. Okay, we bought a boat in January. It sank in March or April. We got the money back, put it back in the company, no harm, no foul. And all I'm thinking is, you owe the government $500,000 and you went and bought a boat? I said, how much was the boat? She said $20,000. And we got the money back. It's back in the company, no harm, no foul. This all happened right about the time that they filed the first quarter late by 1 day and blew their agreement. And I told her, I'm like, Tom is going to go batshit crazy, but all right. Send me the paperwork on the boat. She goes ahead. She sends me the paperwork on the boat. I'm back and forth with Tom saying, Tom, it's 20,000. The boat sank. They wanted the kids to grow up being able to fish like they could, blah, blah, blah. She sends me the paperwork on the boat. It was a $20,000 deposit on a $300,000 boat. These are people that owe $500,000 to the IRS. And so I don't want to send this over to Tom. Tom's asking for the paperwork. I tell him I'm working on it. I'm like, is there something I can do? I mean, I can't hide it. I can't not give it to him. He could summons it if he wants. Well, as it turns out, they have a friend who's a mortgage broker. They have a lot of equity in their house. They end up refinancing their house and pulling out close to $400,000. So they end up coming really close to paying the government off. Not quite, but just about. So they call me, they have this, I tell Tom, look, Tom, we're going to pay the whole thing off, blah, blah, blah. Don't worry about the paperwork on the boat. Anyway, they do the refi, we pay it off. There's like 18,000 left. A month or two go by, they make a couple more payments. It's all done. But at the time they tell me about the boat, I go stomping into my senior partner, Bob, and I'm like, stupid clients. We know how long we spent working on this agreement. They spent like $15,000 in legal fees. Now they go buy a boat. They owe $500,000 to the government. I don't own a boat. Stupid. Bob says, Eric, we love stupid people. Stupid people are going to pay for your 3 daughters' weddings. They're going to buy your second home. They are going to fund your retirement. Don't think of them as stupid people. Think of them as walking annuities. And that's what they are. Many of our clients are walking annuities. Whether it's buying a boat or, frankly, I just really don't like paying taxes, to don't worry, we'll make it up by April. All walking annuities. That is why resolution work tends to be it's the hottest market in tax right now, bar none. Maybe up there with international. International now has taken on a whole new flavor with the internet stuff. But I still think that there's resolution is not only the hottest area, but there's a lot of money to be made. The other thing I want you to take away from this is, listen, these are people going for offers, but they can pay $5,000 a month. They could buy a boat. They could refinance and pull $400,000 out of their house. People who come in for resolution work aren't necessarily broke. They may not be able to pay off the back taxes that easily, but it's not like they're homeless broke. These are folks who simply have made some bad decisions and need help getting it squared away. All right. So remember, everybody, go ahead, keep listening to the podcast, go down below. I'm going to put a link down there. Email in your questions. We will be answering questions on the podcast. I think it's a great idea. I've not done it before. Remember to tune in. We will be posting next Sunday. All right, but we're Dominique and I are going to be recording this coming Friday the 19th of October. So please get your questions in if you want. We will answer them on the show. I've already gotten a handful because I've been out on social media about Dominique. I think this is going to be very cool. So go ahead, get your questions in, and I look forward to answering them. Keep listening, keep building your practices. You want help, you want coaching, you want any of that, come join us in Tax Rep LLC, all right? We'd love to have you join our community, all right? Otherwise, keep working on your practice, keep building. Have a great night.
Hey, everybody. I hope you enjoyed this episode of Tax Rep Network podcast. Listen, there has never been a better time to build a representation practice, right? The 1040 business is not a growth industry right now. With more than 14 million accounts in the collection division inventory and more than 7 million non-filers that the IRS has identified and going to begin going after, this is the time when your skills are needed. Worried you don't really know what to do, think you need training, think you need coaching, think you need somebody to back you up. That's what Tax Rep is, right? Come join our community, begin building your practice, make more money, add 100,000 or more to your bottom line, and know that you've got us watching your back. You have questions about a case, issues with marketing, how to market, you want to use our marketing materials, it is all there for the members in our site. All right. So come check us out. We'd love to have you join us if you haven't already. Right. Keep building on your practice. Keep helping taxpayers. Have a great day.